Hi everyone. Today, let's quickly talk about the debt limit. Then I have some charts to go over. And for full transparency, I'll show you my positions going into Tuesday. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open and Sundays. So make sure you hit the bell so you don't miss out on any future videos. Welcome to the Portfolio Bulletin. Let's get started. I don't want to spend a ton of time on this, but you do have to understand that it is happening. People are talking about the debt limit and reaching the debt limit on Thursday. Of course, they do mention they do have a little bit of cash and some quote-unquote extraordinary measures that they can take. And they mention it here. They won't exhaust that before June, so it's not hugely pressing. But I expect that we will hit the debt limit on Thursday and that the Congress is going to be dragging their feet on this. And it could present some volatility at some point in the future. You mentioned here they don't know how long those quote-unquote emergency or extraordinary measures will take to exhaust, but they don't expect that to happen before June, so we got a couple of months. They won't be able to borrow any money, but they do have some money on hand, which does seem odd since we're in so much debt, but supposedly they have a little bit of cash on hand. And of course, if they don't do something by June and we do run out of the quote-unquote extraordinary measures and cash, that would be a huge detriment. The market tends to go down if the government shuts down. So do keep an eye on this, not pressing right now, but understand that it is something that could affect the markets at some point in the future. Moving over to the charts, starting with the S&Ps on the hourly chart. Let's go ahead and pull up the RSI here as well. You can see we do have decreasing RSI. We do have a topping pattern. Does kind of look like a double topping pattern, potentially top some weakness. We roll over here and take out these lows over the next 2 days, obviously that's going to be hugely bearish. So do keep an eye on that. Momentum is fading here. And if we take a look at the MACD, you can see we did get pushed into green territory on the hourly. But if you jump up to the 4-hour here, you do get the same divergence and the same weakening on momentum. We're also right at the resistance line. This is the big resistance line from the daily chart. Jumping up to that daily chart, you can see this marks the August high, the high from December, as well as that big CPI push. And then we're right at that level once again. And this certainly looks weak at this point, pretty extended. And in my opinion, we are going to move lower some point in the next week. I do want to move up to the weekly chart just for a moment here. You can see momentum is still building just slightly. We got a build here in the last week after a couple of weeks of down move in momentum. RSI did push through the 50 line, so slight bullish momentum here. We do have the 50 EMA sitting up here at 108.70. That should tick down next week, probably somewhere in the 105, 106 level. But understand here that this could be just a little bit of a fake out. And that's kind of what I think is going to happen. We're going to get something like this here that we had in June, where we had big push down, fading momentum for 2 days. And then we get the continuation. And that continuation did mark the bottom here. And if we do get that in the reverse, where you get a move down, slight reversal for a week, maybe 2, and then you get the continuation to the downside, that's going to mark significant bearish momentum on the weekly charts. But understand you might get 1, maybe 2 more weeks. And that's just my thesis. This could certainly continue and maybe we get weekly momentum and breakout. All kinds of things could happen potentially. But my assumption going into the next week is that we get maybe 1 more week of bullish momentum, a little bit of a fake out, and then we get the continuation to the downside on momentum. And going back to the hourly chart just for a moment here, it does kind of look like we could get a drop back to 138. Maybe 137.50, just slightly lower than what we are now, retest the 21. Maybe we get that last push up to resistance in this rising wedge that we have, which is a bearish pattern. Test that one final time, maybe overshoot it, and then we get this kind of sell-off, which would be pretty dramatic. You would expect it to take out the previous lows and go lower. I don't know if we'll get that kind of an overswing. It's already looking quite bearish, but it's certainly possible. Moving over to the NASDAQ on the daily chart, you can see here we do have this kind of a head and shoulders type pattern forming where we have a left shoulder ahead. This is potentially going to be that right shoulder. Does seem pretty likely. And if that's true, then we have the neckline here at 260. The height of that head would be about $30 to $32. And if that does happen, then you have to expect that we're going to meet that price target somewhere around $30 lower. So we would hit the 230 level. If we zoom out here, that gives you the next level right at those pre-COVID highs, which we do have marked here at 235. Maybe we overshoot that just slightly, come down to 230, maybe even 225. That would be your good price target based on this head and shoulders type pattern. Understand that's kind of what it's looking like here. We have a very solid neckline, left shoulder, head, right shoulder in process. This could certainly take a few days to pan out, kind of like what we had here, where it was pretty dramatic, got overextended, slight fade before we got that bigger sell-off. And this is really just the initial stages here. Could certainly go slightly higher, fill this gap. Probably not right away, I would guess. We come up, test resistance, fade out, create that shorter term head and shoulders type pattern, get that head, fill the gap, come up, try to test that one more time, and then we get that bigger sell-off. That's really what I'm looking for here on the NASDAQ as of now. Moving over to the hourly just for a moment here, you can see we have that same rising wedge pattern. We're basically in the middle of the trend here. You can certainly expect a retest of this trend line down at 278. That would be great. Give me some ability to take some profits, get a bigger extension up to resistance, create that shorter term head and shoulders, come back through, create that right shoulder testing resistance as the retest. And then we get this there. That would be ideal. Moving over to the IWM, the Russell, you can see this rising wedge is a little bit more narrow, looks more like a trend, and it's continuing to do quite well, very strong. The hourly does have that same divergence as everything else, but again, looks quite strong. Let's jump up to the daily chart here just for a moment. You can see we actually have this kind of a trend style move happening. So we have the initial low, which was kind of a double bottom from this previous low. You have a high here, come back, retest that trend line, and we might be coming into resistance here. So certainly the top end of this trend line could maybe overshoot here to this upper trend line. And then you would expect a move back down to retest some of these lows and maybe a continuation. Russell looks significantly stronger here. It doesn't have that same head and shoulders type pattern. You go left shoulder, head, right shoulder. But either way, this looks much stronger than both the SPY and the NASDAQ. Moving over to Apple just for a moment, same pattern here. I do want to highlight this trend basically across a lot of different stocks right now. But Apple demonstrating the same pattern, same falling RSI. We had the high RSI here on the 7 o'clock candle on the 12th. We're at that same price level, and we have RSI readings in the 64 area. So lower RSI despite similar price action. And this is definitely starting to fall here. Moving over to the weekly chart here just for a moment on Apple, you can see what this trend looks like. Does look like we're coming up and testing that 144 EMA. Come up, retest that level, get rejection, and get the continuation down. Certainly looks like exactly what's happening right now. Maybe we overshoot it just slightly, get into that 140, 141 area, and get that push down. On momentum, this looks more like what we saw here, where we had big down move, maybe a reduced day or two, maybe a reduced week or two, but get the continuation to the down. Hard to say exactly. Does not seem to me like we're going to get the same kind of push that we got here, but certainly possible. This was a really aggressive move where we got 1, 2, 3, 4, 5, 6 weeks of positive price action in a row. That was quite aggressive. I don't think that's what we're going to get here, but definitely keep that in the back of your mind. It could happen. It's not impossible, but does seem less likely. Moving over to IYT on the weekly chart, you can see we're coming up to that 55 EMA area, currently sitting at 234.10. That'll take a step down next week, 233.10 probably, somewhere in that zone, maybe even slightly lower, 230.50 maybe, somewhere in that zone. Either way, we're probably going to come into contact with that on the weekly chart next week. And then I would expect a rejection from there, similar to what we got here on the August move down. Jumping down to the hourly chart, you can see we have that same formation, a little bit less clean, a little bit harder to view. There's certainly less volume in here, and it does get a little bit more difficult to chart. But you can definitely see that we made a lower high here on Friday. We did not move higher with the rest of the major indices, indicating that transportation is likely to move down and probably will take the rest of the markets with it. Moving over to consumer discretionary on the hourly, you can see here, same pattern. We have that rising wedge. We are right at support here. So like I said, you could see one more push. Maybe we overshoot and push down, but that would put us at a price target of about 141, 142. So another $2 or so higher than we are right now. We still have that consistent falling RSI despite higher prices. So keep an eye on that. If we push higher, RSI doesn't go with it. Again, further indicating that this push higher is extended and we will at least likely get a retrace in the short term. Moving over to the ratios on the weekly charts, just to show how much the Russell is outperforming. You can see the NASDAQ on the right outperforming the SPY, continues to rally here off of the lows. It was oversold on RSI, momentum ticking to the downside in the bullish direction, so you would expect this to continue possibly. Maybe we get an upswing like this, probably not quite this strong. This was the August high here, and I don't expect that we're going to get a rally quite like that. So maybe a slight push higher, we get a pin or something like that going into the move down. Moving over here to the SPY versus the Russell, you can see the huge leg down that we had this last week. And it seems like this is about to break down and make some lower lows here. It's been consolidating for quite a while. And it seems like the Russell is going to improve versus the SPY and the NASDAQ going into the next week. Moving over to the US 10-year yield. This is not something that I talk about very often, but it is worth talking about right now. You can see here we have retest of support, a bounce from that level, maybe even a slightly higher high here compared to what we had in December. We have some pretty clear divergence forming here. So we have the low on the 12th, and then we have another dip here on the 13th. Very similar price action, very similar close. But RSI ticking higher here as we move into this rally. And it certainly seems possible that we could get a breakout early next week. We're right at resistance. And if this does break out of this trend line that we've had going for quite a while from 29 December until Friday the 13th, if this breaks out here and gets at least a slight retrace, even if it's short term, that should push equities down into Tuesday and maybe even Wednesday. So keep an eye on that 10-year yield looking to break out. And if it does, especially early in the session on Tuesday, or maybe even dips slightly and then gets the push through with strong velocity, that's definitely going to push equities to the downside. Moving over to IEF, this is the iShares 7 through 10-year Treasury Bond ETF. So it should be generally the inverse of the 10-year yield. Of course, it'll have some shorter term notes in there between 7, 8, and 9. But it is giving us a little bit of a lead indicator here. You can see we were in this rising wedge, tested the upside multiple times, tested it again on Thursday and failed. And then it looks here like we might be breaking out to the downside. Got a slight retest of the 21. Certainly could push higher, retest this trend one more time going into Tuesday. But if it fails here and we start to push to the downside on bonds, that does seem like a strong indicator that equities will be following shortly after. This ETF did not rally with the rest of the markets, and neither did TLT, the 20-year plus Treasury ETF. So bonds signaling here that we could be moving lower a little bit early compared to the major indices. Moving over to the dollar on the hourly chart. I know we talked about this one in my last video, but I do want to cover it once again. I did a little bit further analysis here. You can see I drew a lot of trend lines, a lot of them saying very similar things. Does seem like a falling wedge to some degree here. And again, that RSI, similar price action, but certainly ticking significantly higher here. RSI sitting at 43.30 compared to very similar price action that we had on Thursday on the 18 and 1900 candles down at 40. So same price action, higher RSI. If we do see a breakout of this downtrend line, that's what I'm going to be looking for. And you would expect that to at least push up to this next level of resistance, somewhere in the 102.80, 102.825 zone. If you get a nice push up higher here, that would be very bad for equities, and I would expect them to sell off. And if we break that trend line and get up to the 144 EMA on the hourly chart, which should be sitting around that 103.25 zone, which would be a stronger level of resistance and certainly a pretty good price target if you are trading this to the bullish side. So that's what I'm really looking for here on the dollar. And again, that fits with my thesis of lower equities on Tuesday and Wednesday. Moving over to JNK, the high yield bond ETF on the weekly chart. I do want to highlight that this is at resistance right here. It certainly could get a little bit higher, maybe fill the gap at 95, possibly test the 55-week EMA, which you would expect to tick down about 30 cents from where it is right now. So maybe 95.75, somewhere in that zone, 95.50, come up, retest that, and then get the sell-off from there. But right now, it is still quite bullish. RSI ticking higher on the weekly, momentum ticking higher. Jumping down to the hourly chart, you can see this looks much more like a trend. Drawing an extra trend line here, you could maybe say that it's wedging up a little bit, creating slightly lower highs, not testing that upper bound here. So certainly potentially demonstrating some wedge-like behavior, but it did make a higher high unlike the other major bond ETFs. But looking at RSI, you do get that same step down. So we had higher prices here on Friday, but we had lower RSI readings compared to Thursday, and even slightly lower compared to Wednesday, which was significantly lower prices. So RSI ticking down, momentum basically flat, if not negative slightly here. Again, certainly possible we get one more push higher into that 94.95 zone, retest resistance, and then we get the sell-off. but does look weaker here on J&K as well. Moving over to the VIX on the 4-hour, I do want to highlight pretty much downtrend that we had. Does seem like we're at support, does seem like we could get up to the next level of resistance, maybe 2 levels higher at 20, giving us a little bit of a down move in the short term. Did get oversold on the 4-hour, which traditionally has been a pretty good indicator that we're going to move higher. You can see back here on December 2nd, we got oversold on the 4-hour and we rallied from there. Got oversold here on 23 November. And then a couple days later, we jumped up significantly. So far, oversold conditions on the 4-hour, pretty good indicator. We're going to get at least a short-term bounce. And that's what I'm looking for going into Tuesday and Wednesday. Moving over to my accounts just for a moment here, you can see my positions. I'm basically all bearish. I do have one covered call here in my IRA. That covered call is sitting down at 278, so I have quite a bit of downside protection there. Does have to sell off quite a bit for me to lose money, and I will likely let this expire worthless on the 17th and get out of those shares because I do expect things to move down quickly once we get the bigger breakouts to the downside. Otherwise, on my individual account where I do have a little bit more freedom to sell naked calls, I do have quite a few of them. I have 5 calls right now to the downside and only 200 shares, so 200 shares worth of covered calls and 3 naked calls to the downside. If you want to know more about my positions, definitely check out my Friday video. Let me know down in the comment section if there's any charts you would like me to cover and where you think the market is going to go over the next few days or weeks. Definitely like and subscribe if you got any value out of this video. I make this video every single day that the markets are open and Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.